Turning a $10,000 investment into a fortune in dividends sounds too good to be true, right? Well, I am about to show you exactly how to do it, step by step. This is not some get-rich-quick scheme. It's a proven strategy that anyone can implement to generate a steady stream of income. Hello everyone, my name is Steven, and with over 10 years of experience in investment banking across Europe's major cities and Fortune 500 companies as a key finance executive, I have helped countless individuals achieve financial freedom. Today, I'm going to reveal how you can invest $10,000 in a way that promises to generate a fortune in dividends. In this video, we will dive deep into the ultimate strategy for dividend investing. Stay with me, because by the end of this video, you will know exactly where to put your money to maximize your returns and build long-term wealth. Plus, I will share 3 specific investment picks that could supercharge your dividend income. When it comes to investing, most people focus on growth stocks or high-flying investments that promise quick riches. But what if I told you there's a different way? One that focuses on generating a steady stream of income rather than trying to hit a home run. That's right, we're talking about dividend investing. Many investors are drawn to dividend investing because it offers a relatively stable source of income, especially during market volatility. And the best part? It's a strategy accessible to anyone, regardless of your investment size or experience. But you might be wondering, why invest $10,000 specifically for dividend returns? The answer is simple. It's a significant amount that can generate substantial income if invested wisely. With $10,000, you have the flexibility to diversify your portfolio and reduce risk. Now, let's address a common dilemma. Investors often want to maximize their dividend returns, but worry about taking on too much risk. This fear can lead to analysis paralysis, spending so much time researching that you never actually make a move. Sound familiar? Another challenge is the sheer number of dividend-paying stocks and investment options out there. With thousands to choose from, it's easy to feel overwhelmed. And while high-yielding dividend stocks are tempting, they often come with higher risks, like dividend cuts or even bankruptcy. So, how do you navigate these challenges and find the right dividend stocks or investment strategy for your $10,000? One effective approach is to invest in established companies with a long history of consistent dividends, such as utility companies or consumer staples. These companies are less likely to cut payouts and offer stability. Another option is exploring exchange-traded funds, or ETFs, that focus on dividends. These funds offer diversification and provide a steady stream of income with relatively low risk. But here's where it gets exciting. There's a particular ETF that tracks dividend aristocrats, companies that have increased their dividends for at least 25 consecutive years. Stay tuned, because I'll reveal more about this gem shortly. You might also consider real estate investment trusts, or REITs, which own and operate income-generating properties. REITs are attractive because they are required to pay out at least 90% of their taxable income as dividends, offering potentially higher yields. If I had to pick 3 investment strategies or specific assets to maximize dividend returns on a $10,000 investment, they would be: first, Johnson & Johnson, a stalwart dividend payer with a 58-year history of consistent payouts. As a diversified healthcare company, it offers stability and reliability, making it a relatively safe bet. Second, the Vanguard Real Estate ETF, VNQ. This ETF tracks the MSCI US REIT Index, composed of US equity REITs. It offers diversification in the real estate sector and provides steady income, with a current dividend yield around 4%. Third, the iShares Core Dividend Growth ETF, DGRO. This fund focuses on companies that have a history of consistently growing their dividends. It offers broad diversification and a strategy centered on dividend growth, which can lead to higher income over time. But you might be asking, how do these investments fit into my portfolio, and what's the best way to allocate my $10,000 among them? Great question. In just a moment, I'll break down a sample allocation that balances risk and return. So keep watching. Before we continue, if you're finding this information valuable, please consider liking this video and subscribing to the Money Mentor Hub. Your support helps us bring more insights to help you achieve financial freedom. Now, let's discuss how to allocate your $10,000. You might consider dividing your investment equally among these 3 options. Approximately $3,000, $333 each. This approach offers diversification across different sectors, healthcare, real estate, and a broad range of dividend-growing companies. By investing in these assets, you're not only tapping into their dividend payouts, but also their potential for capital appreciation. Remember, the goal is to generate a steady income stream while also growing your principal investment over time. In summary, investing $10,000 in dividend stocks and ETFs like Johnson & Johnson VNQ and DGRO can be a smart way to generate a steady stream of income. By avoiding common pitfalls and choosing the right investment strategy, you can maximize your dividend returns and potentially earn a fortune in dividends. Thank you for watching. I would love to hear your thoughts in the comments below. Have you considered dividend investing, or do you have other strategies that have worked for you? Share your experiences. Your insights could help others on their financial journey. And before you go, make sure to check out the video appearing on your screen right now. It's packed with more tips on smart investing strategies that you will not want to miss. See you in the next one.